Just 48 hours after the Reserve Bank of India cut its key policy rate by half a percentage point, banks have begun passing the benefits to their customers. ICICI Bank, Punjab National Bank, IDBI Bank as well as Punjab and Sind Bank have cut their lending rates by a quarter percentage point. ETNA's banking editor George Cherian has the details. George.
Right. So, Avan, what we've had is a number of banks, especially the public sector banks, have started cutting their lending rates, and typically you'll always see that it is public sector banks that always cut lending rates first. They are typically always the last to raise lending rates. And you've had the banking secretary, of course, go around and deny that the finance ministry is in any manner pressurizing public sector banks into cutting rates. But it is an open secret that every time you have rates cut, you have the finance ministry pressurizing public sector banks to lower their lending rates. The thinking really being that once public sector banks have cut their rates, private sector banks are then forced to follow suit. And that's exactly what's happening. So you've had ICICI Bank becoming the first private sector bank to cut their lending rates today. They've also corrected their deposit rates. Also, over the next few days, you are going to see a number of other public sector banks, private sector banks as well, lower their lending rates. But the start typically happens when rates are lowered, with public sector banks lowering their lending rates. So this is something that's going to happen. But this time around, it is going to be interesting to note that you will find lending rates coming off far sharper than deposit rates. So you will see a marginal correction in deposit rates. They will reduce, but the extent to which they will reduce will clearly be much lower than what you will see lending rates come off by, for the simple reason that deposit growth is patchy. You are finding deposits, bank deposits, having to compete with other kinds of fixed rate investment products like tax-free bonds and the like, small saving instruments as well. So deposit rates will come off not as sharply as lending rates. Lending rates are expected to fall far sharper than deposit rates, and this is going to be the first time ever you're going to see a trend like that.